Hello and welcome to Administration Wise. In this video, we will look at the financial relation between the center and the state. The Constitution elaborates the provision in this regard, and it is mentioned under Article 264 to 290, which govern the financial relation between the union and the state, in which almost many attempts are made to allocate almost every possible source of taxation to either of the two, that is center and state. The task of filling the minute details in this context has been given to Finance Commission. So in this very video only, we will also look about some technical aspects and conceptual aspect of Finance Commission also. The basic idea was given to reduce the possibility of litigation between center and state, and the basic principle to guide the allocation of the resources are efficiency, adequacy, suitability, and the attempt has been made to lessen the burden of the taxpayer and the source of the income of the federation, and hence the sources of income of both union and states are divided between them, and these are as listed below. So for the source of union, these are corporation tax, currency, coinage, legal tender, foreign exchange, duties of custom, including the export duty, duties of excise on tobacco and certain goods manufactured and produced in India, state duty in respect to the property and other agricultural land, fees in respect of any of the matter in the union list but not included in any fees taken in any court, and the foreign loans, lotteries, post office saving banks, posts and telegraphs, telephones, wireless broadcasting and other similar form of communication property of the union, public debt of the Union, railways, rate of stamp duty with respect to exchange, checks and the promissory notes, that is P note, taxes on income other than agricultural income, taxes on capital value of assets exclusive of the agricultural land of individuals and the companies, the taxes on the stamps on other than stamp and on the transaction in stock exchange and stock market, taxes on the sale and purchase of the newspaper and on advertisement published in them, terminal taxes on goods and passenger carried by the railway, sea and airways, Reserve Bank of India. These are the sources of income of union. Similarly, the sources of state income are the capitation tax, duties in respect of succession of the agricultural land, duties of excise on certain goods produced and manufactured in the state, such as alcoholic liquids and the opium, etc., state duty in respect to the agricultural land, fees in respect to any matter in the state list but not including the fees taken by any court, land revenue, rate of stamp duty in respect to the document other than those specified in the union list, taxes on the agricultural income, taxes on land and building, taxes on mineral rights subject to limitation imposed by the parliament and relating to the mineral development also. Taxes on consumption of the electricity and sale of the electricity, taxes on entry of the goods into the local area for consumption, use and the sale therein, taxes on the sale and purchase of the goods other than newspaper, taxes on advertisement other than those published in the newspaper as newspaper is a union subject, taxes on goods and passengers carried by the road and waterways, and taxes on the vehicles, taxes on animals and boats, taxes on professions, trades, callings, employment, taxes on luxuries, including entertainment, amusement, betting and gambling, and tolls. Now, how these are disbursed between the union and state in the very first kind, it is the duties that are levied by union but collected and appropriated by the state. The framers of the constitution, realizing that the financial source of the state would not be sufficient to facilitate the development, made the provision for sharing the union revenue by the state, and it is stated in the Article 268, which lays down the duties which are levied by the union but are collected and appropriated by the state. These are stamp duties and duties on the excise on medicinal and toilet of preparations, which are mentioned in the union list, and proceeds of any such duty leviable within any state to be assigned to the state only. Second kind is the taxes levied and collected by the union but assigned to the state. These are duties in respect to the succession of the property other than the agricultural land. Agricultural land इसमें include नहीं होगा. Estimate duty in respect of the property other than the agricultural land. Again agricultural land को हम लोग exclude करके चल रहे हैं. Taxes on the railway fares and freights. Taxes other than stamp duties on transaction in stock exchange and future market. Taxes on sale and purchase of the newspaper and advertisement published therein. Terminal taxes on the goods and passengers levied carried in the railway, sea or air. Taxes on the sale and purchase of the goods other than the newspaper where such a purchase takes place in the course of interstate trade and commerce. Third kind is taxes which are levied and collected by union which may be distributed between the union and state. These are taxes on income other than agricultural income and union duties of excise other than such duties of the excise on the medicinal and toilet preparation as are mentioned in the union list and collected by the government of India. Now, the next topic is Finance Commission. It is Article 280 that lays down for the formation of Finance Commission, which are set up by President for the period of 2 years from the commencement of the Constitution, and within the period of 2 years from the commencement of Constitution, and the tenure of the body is of 5 years or at such earlier time as the President considered necessary. It consists of a chairman and four other members. It is 1 plus 4, who are all appointed by the president only. कौन appoint करता है? President ही. The parliament has been empowered to determine the qualification required for the appointment of the members of the commission and the manner in which they shall be selected in pursuance of this provision. The Finance Commission Act was passed in the year 1951. कंपोजिशन देखते हैं. 1+4 का होता है. ये 4 मेंबर क्या क्या होने चाहिए? They must be qualified to be appointed as a judge of high court. They should have special knowledge of finance, who have wide experience in the financial matter and in administration, who have special knowledge of economics. फंक्शन क्या है फाइनेंस कमीशन के? आर्टिकल 280 also specifies the function of the commission. It says that it shall be the duty of commission to make the recommendation to the president regarding the following affairs. What are these affairs? These are the distribution of funds between union and state of the net proceeds of taxes which are or may be divided between them, and the allocation between the states of the respective share of such proceeds. The principle which should govern the grant in aid to the revenue of the state out of the consolidated fund of India, and the measures needed to augment the consolidated fund of the state to supplement the resources of the panchayat in the state on the basis of its recommendation that is made by Finance Commission of the state. The measure needed to augment the consolidated fund of the state to supplement the resources of the municipalities in the state on the basis of recommendation made by the Finance Commission of the state, and any other matter referred by the commission by the president referred to the commission by the president in the interest of the sound finance. And by this we come to an end of this video. Thank you for the time being.